Hello. The company being analyzed today is Bondada Engineering Limited. This is a company which is looking to triple its revenues in the next 2 years from 1500 crores of revenues in fiscal year 2025 to 4500 crores in revenues by fiscal year 2027. We are currently about to be ending fiscal year 2026. So you can see this company is going massive growth. Today, we're going to analyze the company's financials, what it actually does, and its future growth plans to see if it can actually achieve those growth plans. So let us start. First, we have a market capitalization of 4,050 crores. So pretty small cap company. Current price of one share is 363 rupees. Currently, it is trading at 24.4 times earnings. Book value of one share is 51.8 times, and return on capital employed, return on equity, high percentage, and these are very important numbers. Now, the company's financials over the past few years. So, first, at the left side, you can see revenue from operations in millions of rupees, and you can convert it into crores. So, from fiscal year 2021 to fiscal year 2025, the company's revenues grew at a 41% CAGR growth rate from 287 crores in fiscal year 2021 to first of all 800 crores in fiscal year 2024, then 1570.9 crores in fiscal year 2025. Massive growth. Then, okay, the first few years were a bit slow, but still going from 287 crores to 333 crores is still good thing. Then EBITDA, earnings before interest, taxes, depreciation and amortization grew at a 60% CAGR in the same period from 16.2 crores, from literally 16.2 crores in fiscal year 2021, then rising to, I think, what is this? This is 29.7 crores just 2 years later, then having a massive boost up to now fiscal year 2025, 170 crores of EBITDA. Then we come to net profit rising even faster at a 65% CAGR from 9.2 crores or 92 million rupees in fiscal year 2021, then rising all the way to fiscal year 2025's 113.2 crores, from 9.2 crores to 113.2 crores in 5 years. Actually, four. 1, 2, 3, 4 years. Then EBITDA margins and net profit margins, you can see rising from 5.7% to 8% to now 10.9%. Net profit margin rising from 3.2% all the way to 7.2%. So you can see the margins have risen, revenue has risen also very fast, and very, very profitable growth. Then, return on capital employed for fiscal year 2025 was 23%. Nice. Return on equity fiscal year 2025 was 23.7%. Now, if you can see H1 fiscal year 2026, you see H1 fiscal year 2026, H1 means the first half, meaning quarter one plus quarter two combined. And you can see return capital employed, return on equity. There's a word here, annualized. What does that mean? So, annualized means last 4 quarters taken. So, H1 fiscal year 2026 return on capital employed and return on equity figure you see 29.6%, 30.3%. These are based on the last 4 quarters, the latest 4 quarters. Okay, meaning the H1 fiscal year 2026 quarters, that is quarter one plus quarter two, plus quarter 3 and quarter 4 of fiscal year 2025. Makes sense? Latest 4 quarters. So you can see 29.6%, 30.3% return on equity. Very nice. Debt to equity ratio 0.34 times. Lower this, usually the better. Current ratio 1.5 times. Interest coverage ratio, very important, very healthy, 8.38 times. Now, here we have working capital cycle. Basically, lower this number, this net working capital cycle, the lower this number, the better. Going from 111 days in fiscal year 2025, now having 89 days in H1 of fiscal year 2026. The first half, it's better. So this number, it should get lower and lower, meaning it's better to get lower and lower. Not like it must get lower and lower, but it's good if it gets lower and lower. So, Bondada Engineering, architecting Bharat's infrastructure future. So, what does the company actually do? Here you can see renewable energy, telecom, railways. These are the existing segments. But the upcoming segments, it's expanding to battery energy storage systems, data centers, and defense and aerospace. Now, if you're wondering one thing, a word has been mentioned here a lot. Actually, two words: EPC and IPP. All right. Very simply, EPC, you can see here, engineering, procurement, construction is very simple. Okay. For example, solar power plant. Bondada makes a solar power plant for a client under an EPC model. Basically, they make the solar plant and they sell the solar plant to the client. That's it. They sell the complete power plant to the client, EPC model. Then the IPP model is basically they make a solar plant, but they do not sell that solar plant to a client. What they do, they own that solar plant and they sell the electricity generated from the solar plant to the client. IPP is way more profitable than EPC, like way more. EPC can reach maybe 18-20% EBITDA margins, while IPP can reach 85 to 90% EBITDA margins. But IPP requires a lot more financing, a lot more funds, way more capital intensive because you need to finance that project, right? EPC, the client is paying for the entire project. IPP, no. So it's same like this: renewable energy EPC and IPP, and BESS, battery energy storage systems. Okay, massive segment, battery energy storage systems. So integrated infrastructure solutions across core and emerging sectors. So the biggest is renewable energy, solar, IPP, and EPC. Second, we have telecom. One, we have EPC. Basically, they're making the entire, let's say, telecom tower, the telecom tower. You can see tower erection, then the site construction, finding the site construction, the fiber cable laying, so laying that fiber cable, equipment supplying, all of that stuff. Then O&M, operation and maintenance. You can sign contracts with operation and maintenance to maintain, okay, repair the telecom towers. Then comes railways. They make some railway infrastructure, not the trains themselves, but the supporting infrastructure for the tails, for the rails, the rails. For example, ground infrastructure, it is written, okay, and railway signaling. So not the railways, but supporting infrastructure for railways. Then comes battery energy storage systems. This is a booming sector, coming to booming sector. It's going to boom in India because many governments, many clients are requiring that if you are having a solar power plant, you want a battery energy storage system to store the excess electricity generated by solar plants during the day and use that excess electricity to supply during the night when there's no sun, no solar power. So, very important battery energy storage systems. And data centers are the newer one, and some product manufacturing they already do, like green building construction material, UPVC, polyvinyl chloride, and aluminum profiles. Okay, telecom towers, solar module manufacturing. So a lot of products relating to their already existing segments and some related stuff. Now, this is going to be massive. Okay, they currently have an order book, that is orders from customers, around 5,989 crore rupees, 59,890 million rupees worth of orders from customers right now, of which the largest you can see amount is renewable solar. Second is telecom, 998 crores. Then comes Indian Railways, 228 crores. And then we have products, other products, LEDs, AAC blocks, 190 crores. Now look at this. L1 orders. These are not order books. These are orders they've currently bid for. Projects they are currently bidding for. Okay. L1 orders means the lowest price orders, meaning these are the tenders or government bids or client bids in which they have bid the lowest amount. They have said they're going to do the job in the lowest cost to the client. They're the cheapest option. Bondada is the cheapest option in these orders. So 2,628 orders. Okay, they're awaiting a letter of approval, letter of award from these players. These are orders they're expecting to win because they're the lowest. When tenders submitted, meaning these are projects, they're submitted, I guess, in total, 7,531 crores of orders they've currently submitted for. And finally, this is massive. This is an order, this is a 9,000 crore order, which they already have, and this is not included in this. This total order book does not include this 9,000 crore project. What is this? This is a 2 gigawatt IPP, solar IPP project, which they have signed with, I guess, the government of Andhra Pradesh. 2 gigawatt project. When fully scaled up, this project can alone give more than 1,000 crores of EBITDA. Yes, when this project is fully scaled up, it can give 1,000 crores of annual recurring revenue for how many years this agreement is going to be. And it's an IPP project, okay? IPP, they sell the power generated, they sell the electricity generated from the solar power plant. So it's stable revenue because the client has signed an agreement, a purchase power agreement, PPA, a purchase power agreement. So when this project is fully scaled up, when they're supplying 2 gigawatts of electricity per year to Andhra Pradesh government, they will generate more than 1,000 crores of EBITDA. From what I understand, 1,000 crores of EBITDA per year for how many years the project is going to be for. So you can see massive. Then Vision 2030. First, look here. 1 billion revenue company, USD. So by current exchange rates, let us say $1 equals to 87 rupees. By 2030, they want to have an annual revenue of 87,000 crores. They're currently at 15,070 crores. They want to go in 5 years to 8,700 crores, a $1 billion company. Okay. How are they going to do that? First, they want to achieve a 25 gigawatts renewable energy capacity. 25 gigawatts, out of which I think 21 is going to be EPC again. Okay, EPC 21. Then they want to strengthen telecom leadership for digital Bharat and 5G expansion, enhancing railway modernization with safety and efficiency. Okay, scaling up data center services to power the digital economy and expand in defense for national reliance. So all segments are expected to contribute. I guess solar will be the main one, but of course, telecom, very important, very important. See, each segment is important. Railway is important, data centers, and of course, defense. Now, let's talk about the defense. Strategic entry into the defense system. Now, if you will read this, they're not manufacturing, let's say, ammunition. They're not manufacturing tanks. They're not manufacturing warships, okay, jets. What they're manufacturing is the supporting systems, the electronic supporting systems, it seems, which are essential in these equipments you can see. Technology driven, innovation focused. And you can see Vision 2030, this 2030 vision. The first is to become a leading defense engineering, manufacturing, and services partner by 2030. Okay. Now, see this. This is technical stuff. I don't understand a thing. What I can see is, first of all, land systems. Okay. Generating land systems, making technological land systems for vehicles. Okay. Then is aerospace. Then is naval. So they're designing systems for all three of them. You can pause and read, or you can go to the investor presentations yourself and read this interesting stuff. But they're doing stuff for land, they're doing stuff for aerospace, land as in the army, in the aerospace, and for navals also, for the navy. So they're doing things for all of them. Okay, they're going to be designing electronics and avionics, like circuit designs, okay, assemblies, embedded systems, okay. They're going to be having, as you can see here, maintenance and testing services. Testing services, testing if the equipment actually works. And what else can we read? Yeah. All right. So supporting systems, the electronic systems, whatever is needed. As you can see, it's written here under the naval systems, energy storage systems for marine applications. See, it's a supporting systems. As I've said again, I guess, manufacturing the same thing, but it's important. And see, it seems they want to cater to all of them, the army, the navy, and yeah. Then the 2 gigawatt IPP project we talked about. This project alone is expected to generate, first of all, 9,000 crores of EPC revenue the next 5 years from what I understood from the con call. 9,000 crores total EPC revenue. Basically, you make the project, you sell to the client. That's interesting. Isn't it the IBP project? Okay, I will check this line later. I think it's correct. 9,000 crores of EPC revenue next 5 years. Once fully scaled up, yeah, this is correct. This one is fully correct. I will have to check this one. Once fully scaled up, 1,000 crores of annual income for next 25 years. I think it should be EBITDA because another company had a similar project and they were generating 1,000 crores of IPP. Sorry, EBITDA. Okay, at least 1,000 crores of revenue is not bad for the next 25 years. And I believe they did say this 9,000 crores of EPC revenue next 5 years. I will clarify this, check this, but I think they said this. Now, on call analysis, the latest earnings conference call, some things taken. So, first is this they entered into the solar EPC segment, private developers, and by 2022, they had good credentials in the solar EPC. Now, their portfolio in solar is 1 gigawatt commissioned. 1 gigawatt of capacity has been commissioned that is installed till now. 2.5 gigawatts is work in progress, meaning currently 2.5 gigawatts is being installed. So 1 gigawatt installed, 2.5 gigawatts is currently being installed, including the 650 megawatts of Adani's is also being converted into work in progress. So currently being installed. Okay. Then participated tenders, they have done around 7,500 crores. You already saw that. Total projects they have bid for now or they're bidding for now 7,500 crores. And see this. The previous history of cracking the order is about 25% at this point of time. So according to the previous history, they win around 25% of total orders. So out of this 7,500 crores, they have a pretty good chance of getting a winning ratio of 25%, which is close to 2,200, 2,300 crores. 25% is the historical order win ratio, bidding win ratio. Then some few concurrent analysis. So first, let's read this. And after considering our operating cash flow for the first half is minus 43 crores, minus 43 crores negative operating cash flow. Not a good thing. We are striving hard even to have cash flow positive by March 2026. So cash flow positive by March 2026 is the effort. Then, as I mentioned in a previous discussion, a company always reports 40% of revenues in the first half, 35 to 40%, meaning the annual revenue quarter one and quarter two total report around 35 to 40% of annual revenue, and the 60% of annual revenue comes from the second half, that is quarter three and quarter four. So if you have quarter one and quarter two revenues, then you can actually try to calculate the annual revenues because 40% is quarter one, quarter two, quarter three, quarter four, you will see zero point 0.6 remaining. You can add them up, you can get the entire projection. Usually it holds. Then a question and answer. Okay, the Q. Let's see the question first. Your point is taken. I had one more question. You are envisaging, 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 envisaging to double your revenues by current financial year end and tripling the revenues by fiscal year 2027. That would mean revenues close to around 4,500 crores by financial year 2027 end. Are you confident of achieving this target? Answer. The past record in the last 2 years itself speaks for that. And in fact, it's a very conservative estimate in case of, if you look at a past performance in the last fiscal year and then in H1 of this year. So this answer confirms that they're first of all expecting revenues to double, going from 1,500 and something crores in fiscal year 2025 to 3,000 crores in fiscal year 2026, then go from there to 4,500 crores for fiscal year 2027. And I think it's a bit conservative too. So massive growth. And then finally, question has been asked. There's a question. How do you see the battery energy storage system segment growth for the next 3 years? And how much can we explore till now? What is the opportunity in the coming year? How much have we explored till now? What is the opportunity in the coming year? How much revenue are you expecting next 2 to 3 years from best segment? and the, let's say, the more medium term opportunity you are seeing. Right now, we have an order book of 850 crores. 850 crores of battery energy systems order book is there. Okay. And even next 5 years, I can tell that actually this will grow 100% CAGR. This 850 crores of best order book, they're optimistic. I'm very optimistic at this point in time. It can grow more than 100% CAGR in next 5 years. 850 crores they have right now order book. Next 5 years, they want to grow at 850%, sorry, 100% CAGR. They want to grow from 850 crores to double that. Take that amount, which is I think 1700 crores, double that, that is 3400 crores, double that order book, and then double that order book. So how much is that? Let's see. 850 crores. Uh, Next 5 years, basically. Okay, next 5 years. Am I reading this correctly? 27,000 crores. Hold up. 850 will double. Okay, that will bring 1700 crores. That will double 2400 crores. Then that will double 1600 crores. Hold up, hold up. Am I reading this correctly? 27,200 crores. Hold up. Let me do the math again. Okay, okay, okay. So we got how many years? Next 5 years. Next 5 years. Okay. So 850 will double, then double, then double, then double, then double. 27,200 crores. 27,200 crores. 100% CAGR next 5 years. That is the order book they could expect. And to execute a battery energy storage systems order, they need around 15 to 18 months. The total order book, 15 to 18 months of time to execute, that is complete the entire battery energy storage systems. So this is it. This is Bondada Engineering. They're looking for some extremely massive growth, like extremely, extremely massive growth. That is it. Bye.